Okay, let's jump into things. Where we at? 9:57 on 18th of June. So look, a couple of bits and pieces and that sort of happening overnight actually, mainly sort of headline driven and that, but we did see a little bit of data coming out of the US and that with the retail sales. So it was pretty quiet through the rest of yesterday. I mean, that's right. Sort of we do it sort of early in the morning, so we got BOJ, which held flat, basically, sort of as expected. Though the sort of press conference, I think, came out. Well, the response for it was probably a little bit more of a sort of hawkish feeling than possibly people have been expecting. Like they were going into it, obviously with a hold being a hold, that's fine, but just how the press conference tone would have been, I think they were expecting something possibly a little bit more dovish, and we actually sort of got a bit more of a sort of hawkish sort of response from UADA in that. So that sort of actually sort of firmed the yen up a little bit, which of course, weighed on DXY a little bit more, like it was looking for any other sort of reason too. But that was about it sort of through Asia. Europe was again a little bit quiet in that, and then sort of coming into the US sessions and that we had retail sales coming out. And again, just missing. And it's just endlessly sort of bad data coming out of US. Well, it's not necessarily bad, like it's not like sort of shockingly bad, but it's certainly not positive, like put it that way. And the market had been for the last, well, has been, I shouldn't say because it's not completely over now, sort of absolutely dumping down on US, well, DXY and that basically off at any chance it could. It find any little sort of reason to sell it down, and they would just absolutely thump it down. This data came out, and it was kind of initially a little bit of the same response, but I'll also sort of show it in the charts in a moment. But obviously, eventually, it's kind of reversed. It actually sort of really bucked the trend, and even off this weaker data, started to rip up a little bit more. We had a bit of a flag breakout, and then we had a couple of headlines over the top of that, which also added to US dollar strength through the rest of the night. So, in terms of sort of news or data, sorry, coming out after that, not really anything super of note in that. We've got a bit of Aussie data coming out. We've actually just had a bit of Japanese data come out a moment ago that seems to have sort of strengthened the yen up there a little bit. Moving forward, we've got CPI latest today for the pound at the BOE, and then they're looking to sort of come down a little bit with this as well. So should this sort of come down, look, I don't put too much stock in UK data and that to affect the DXY. I don't think it makes up enough of it. Then outside sort of like GBP pairs, I don't think it really has a sort of massive effect that can kind of ripple across the market. Moving forward after that, we've seen unemployment claims seeming to sort of maybe stabilise a little bit, although at a little bit higher than it had been for the last couple of months. So been sitting in that 2030 band. Now it's moved up into the 40s, the last couple of prints. As you can see here, slowly creeping up, but now seeming to sort of stabilise a little bit, so 20,000 higher. Again, not sort of big shock numbers here till we sort of get up until sort of, maybe mid 300s or something like this. We'll start to see people sort of concern a little bit more about that. Building permit stats, boringish kind of data. It's something that, look, it's worth having a look at, but it's not going to move the market. The big thing that we're looking for, of course, is 4 o'clock tomorrow morning, Melbourne time, and that is FOMC. And look, it is pretty much expected to hold. But again, it's all about the sort of the press conference afterwards, the statement to sort of see what outlook do they have with this. Yeah, are they sort of saying, I would say, given the fact of all the geopolitical stuff going on at the moment, my feeling is that they will definitely hold and err on the side of caution, meaning probably more of a slightly more hawkish stance than that. That's my sort of feeling with it. We'll see how we go with that. I mean, obviously, they have been absolutely dumping down US dollar no matter what, despite last night. So I think that's really going to be a make or break in the short term, say let's call it medium term for the US dollar. Because if they come out with a little bit more of a hawkish stance than that, given everything else going on at the moment, we could see a little bit further upside on US dollar, and it is definitely due at the moment. And then, yeah, of course, we move across. We've got Aussie data and that, but we'll sort of cover that tomorrow with our favorite 20K spam expectation. All right, so jump onto the charts. We can have a look and sort of see how things sort of played out. So this was I put a chart on X last night. We were around this point here where the data sort of came out. Said, look, I identified this little flag that we had sort of breaking through here, and this absolutely ripped to the top side here. And this is what I was talking about in the sense of, the data came out, it came down, boom, boom, boom. It only managed a 38% pullback from this move here. And as we know, 38% pullbacks are still bullish momentum. And this is just looking in this leg here. You've got to, like, depending on your time frame of stuff. I mean, of course, wow, we're definitely in the down move here. You can see it's stabilized a little bit. It's actually broken through and put in a new high. Even when it was trying to stabilize around, well, at least around these points here, unable to put in the new highs. The only time it did, it sort of had that big gap up and then just got absolutely slammed into, which confirms a little bit more of this falling resistance, which we seem to be sort of coming into right now. Actually, let's put this on a maybe higher time frame. We can have a look at this. But this is, of course, gets a bit scrappy down the bottom here, but bear with me. Going way back to the top up here, we've got one touch, two touches. It kind of broke away onto its own little channel down here where it attempted to break out, but yet confirmed this topper, sorry, this top/upper sort of falling resistance. It seems to be coming back into this. If we zoom right down into this now, where are we at? Really coming back into this big falling resistance. So it's actually at a pretty crucial kind of point at the moment. Look, because it's been so drastically down and been so choppy and that, there's going to be endless levels and reasons for this thing to be sold down. We push back up past this. If we flip and continue this move here, which, if you look at this on a 4-hour basis, they're quite bullish candles coming through here, like these two here, and obviously sort of coming into the end of the session, quietens down a little bit into that resistance. If we flip and decide to continue here, I think sort of definitely 99.2, that sort of big double bottom that we called the other day, or I called the other day, up at 99.2, the measured move of the double bottom, I think that's definitely a target. Because if we sort of move up along here, we've got this previous resistance, horizontal. We've got the measured move of this double bottom, which is clearly broken out to the top side here. You probably have some people that are going to be taking note of this moving up. So the sort of path moving forward, should this candle flip for myself, would be up to the price target here, some sort of pullback here, and I think you're going to start to see people start to get a little bit worried. And should FOMC sort of come up and break through here, this is the path that would be leading us potentially a little bit higher. And I mean, it's all predicated firstly on breaking through this falling resistance, but you're going to see a response from this level up here. Like, we've seen that the market loves to sort of buy it here, sell, 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 sell. They've exited as much as they could over here, but, give it another shot. There are people that are still looking at this thing on a higher time frame, which is very much still down, 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 down. So it could turn out to be, and this is purely just sort of doing this as I'm talking here, a much larger head and shoulders. Should this thing decide to really sort of come back down and test over here, there's a possibility that we could have a larger head and shoulders forming, should this thing break back down over here. I think the response and the way that this is broken up over here, it's worth at least a conversation as to sort of whether this thing's going to go higher. Look, this is a bigger structure. Should this thing fail, should they sort of have a bit more of a sort of dovish tone, I think we could definitely see some downside on this move back down to possibly, these levels over here. Maybe this would only just come over here. But this is potentially inverted head and shoulders. Should they sort of take it a bit faster, I think the speed of this coming into potentially a second test of 99.2 will be sort of a determining factor, because if we sort of come back down and then sort of they come in a bit more hawkish, oops, no, oh, that's stupid, isn't it? Let's do this. Those two look vaguely right. If they come in a bit more hawkish, look, it's still kind of coming into the same level here, and I do price levels, not time. But the idea is still being a back test to the top side of this falling resistance, which we're now sort of confirming up a little bit more. Should they sort of bounce off this and then have a second run through 99.2, I imagine it's going to get a lot of people sweaty from this level up over here. And I'd say that's your kind of breakout level above 99.45, call it 99.5-ish, this zone here. Oops. That's your actual breakout level. Get this stuff out. Whoops. This stuff out of the way here. So that's the sort of path looking forward. But I would say it's most likely worth a conversation to sort of see what's going to be happening up around 99.2 if it can get through this falling resistance. Obviously, you know, we had a little bit of a tiny, if you get onto a small time frame, you can see there's actually a tiny little gap up this morning into this zone, and bang, they've sold it down straight away. So look, we'll see how we go. I mean, it's early hours, what's it, 10:08 now, so you know, there's still plenty of time for these moves to sort of eventuate and move and play out a little bit, but I'd probably be looking for a bit of a sort of continuation up towards 99.2. See what happens with the market. I do think we're going to get a reaction there, because that'll be the completion of this bigger sort of double bottom. Put it on the 4-hour, you can see it a bit better. With this double bottom, measured move takes us up around here, 99.15, 99.2. Just another thing of note as well, if you put this on the daily, we had a very nice sort of negative divergence down off these lows down into the support. And of course, yeah, negative divergence is like kind of my bread and butter as to reversals. I do love these things. And when they do play out, and this is the point that I sort of feel that this could potentially have a little bit more upside to it, they generally don't play, they play out relative to the time frame that they're on. And the fact that this is on a daily time frame means your response can be somewhat in proportion to that, i.e. you're not doing a daily negative divergence and then sort of petering out on day two. Just like you're not doing a negative divergence on a 15-minute and having it carry on for a week. So we'll see how we go, but I'll probably be looking a little bit more upside here, targeting 99.2, look for a pullback, see what the buyers do, see if they sort of step back in around this sort of 98, like this bottom of this previous kind of range that we were playing, also acted as a support. If we see them sort of come back and test here, I think that's the way that you're going to move up. Confirmation is going to be kind of like up above that sort of 99.5 to say we could probably possibly move a little bit lower. Really moving on with that, should we get a move over here, again, you're stepping out to another potential larger double bottom. And same rules kind of apply, that, you know, you'd be sort of looking to sort of target here. You'd be definitely seeing some reaction from people at this zone up over here, this 10, 190, 102. That'll be your major breakout. Whoops. Should this thing, look, this is obviously down the track. It's not happening tomorrow, but as you can see, you build these things out from a small time frame that we had sort of working over here. We had little double bottoms, bigger double bottoms. We got little flags on 30-minute, 1-hour time frames, and then you build it out eventually till you're getting to your bigger picture on the sort of on the potential daily time frame. And so this is what I mean when I sort of say that it's sort of like, you know, it could be in for a potential squeeze. And one thing that I go on and on and on and on about with you know, US dollar, and I always reference, are these kind of moves back along here where people thought it was going to roll over and it jams up higher. Technical, lower, 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 jams up higher. And it's happened time and time again. Here, rolls over, fires back up. Rolls over, fires back up. Rolls over, fires back up. This is where I came up with the term the fanboys, because it sort of like looks like it's technically should be sort of going one way, but it keeps firing up. So, you know, you can see how long these things take to turn around sometimes, 28 days. I don't even know how long we're on this. This is obviously a lot bigger than this, but it is still the same in the sense that, you know, we are seeing a potential double bottom setting up on a higher time frame here. But that's a broader view. definitely got some smaller levels to trade first. But again, you use these smaller confirmations through these levels to then open up the idea to be getting the bigger moves. So a little bit to come here. FOMC is going to be quite interesting. Quite interesting, for sure. All right, move along. We got gold. Gold is which one are we using on? So we had a little break here. That's right. That's the problem of having so many of these trades. Clean this chart up. I put this on X yesterday. To me, this is looking very sort of much like it's running out of puff. Look, it's lines all over the place. That's fine, but you know, for what it's worth, that's our main channel. This sort of orange one coming here. This yellow one, obviously, sort of gone off on its little tangent and sort of flew up here. Had a bit of a sort of confluence down at this 31.30 level, where we obviously saw that big move up. But that's just got us to where we are now. Where we are now is potentially a 3 drive. So we got a nice solid baseline that we can work off. We got 3 drives, which is reversal. We got rising wedge, which is reversal. We got negative divergence, which is reversal. So that's the confluence there, in my opinion. Early indicators are obviously just first of all taking out this little wick down here. So let's go underneath this. And that also should be pretty much testing rising support of that wedge. So 62. So get down underneath there. Look, this is daily time frame, so you know it's obviously probably most likely not going to be happening straight off the bat until we see days like this, but in a reversal. Just, I'm still blown away by these moves here. You know, 3,000, like $2,500 in like the space of a week or something like this. Anyway, point being is negative divergence, wedge, and a 3 drive are 3 sort of bearish reversal indicators that potentially, should they all line up, could lead a little bit lower. Now, a couple of things to unpack with this is that, you know, typically sort of gold has always been, you know, wars breaking out, buy gold. Excuse me. It hasn't so much been this. It did obviously have a little bit of an impact on it, but if we get right down into it, remember, even on the smaller time, this is the point of sort of doing these things on the smaller time frames. Look at this. 1, 2, 3. 3 drives higher. Disregard this little wick. This is just this feed. This was a big gap up, and they just sold into it. Break down. Boom, boom, boom. Seems to be sort of trying to stabilize around this level here. Hence why, you know, this wick, we've got 3 drives down here. So this could, of course, above, say, let's put this down over here now. Let's call it here. Actually, this is the level. Above 34.10, could see a squeeze. Excuse me. Don't want it to mess with the charts. That's where you could say, okay, look, maybe it's going to sort of have a bit of a push up. I'm obviously more in the camp of this thing coming down. Underneath 33.60 takes you outside, well, kind of, you know, tests that support, takes you to the lower daily candle, as we sort of went across a second ago, and leads to this bigger move down over here. But the point is, from what I was saying a second ago, actually, is that even though you've got this sort of escalation with war, because, okay, so saying about sort of 8 things at once here, but we had the lead into Friday, and everyone's like, oh my God, they're bombing, and gold went up. Okay, that's a typical response. That's what, okay, you know, time of war, gold goes up. Okay, fine, that's a textbook. De-escalation potentials, the world didn't blow up, and the market sort of gapped up because of just the carry-on flow of this, but then it sold into it, probably just sort of pairing off a couple of hedges because, you know what, it's the world hasn't blown up, so maybe we're all going to be okay. But we've seen the last sort of session or two, a lot of headlines, and particularly even overnight, Trump saying that, you know, potentially sort of, America may need to enter, they may need to put an end to these sort of things. A lot of speculation and talk around that. Gold has not responded. So whereas it was doing its sort of textbook move, gold goes up, gold gaps up, all war-based sort of stuff. Yeah, there's a nice little wedge here I had drawn on the other one as well. It got sold into. More headlines, still sold into. And it's not responding, in my opinion, to any sort of further escalation. They're still dropping bombs. They're still going tit for tat, sort of threatening more and more. Yet the gold is not responding to that. And this is the thing that I think that if we step out, had we not had this ridiculous run up with gold back over here, and say gold was still doing this down along here, then I reckon there'd be more room for it to move up. But since we've already had this incredible run to the highs, three runs to the highs at the moment, I feel that like maybe this kind of situation is being used more to distribute and more to sort of sell into a little bit of this hype around sort of what's happening with the war and what gold should be doing. Because the textbook response, of course, is yes, okay, wartime, let's buy gold. But got a lot of people that are in a lot of profit from gold already running up before this war thing happened. So maybe they've sort of thinking, okay, well, this is obviously the time, because remember, they started selling it down from, high 34s once, twice. So they've had two times where prior to this war breaking out, because at this point here, it was just still tariff talk and all this kind of stuff. And the market said, let's sell it down, let's sell it down. Now they've got a third option, which has come out of nowhere, which is, the war breaking out. And they're like, great, look, I've got another option to sell it at that same point. So I think you've got to take note for the fact that it's not responding how technically it should respond in these kind of environments. I mean, look, it's still within half a breadth of the highs. So yeah, it's not bearish necessarily, but I think the price action around this period is a little bit more to the point that they're selling into the latest fad catalyst, which, I know it trivializes it, but let's just be real. We're just talking about markets here. The latest sort of narrative or reason for gold to be sort of pumping higher, they're not running with it. I mean, if gold was going to go to 36 or 3700, now's the time. Why not? The tariffs are still sort of really ticking along. You've now got war on top of it. You've got your sort of flaggish technical breakout here. Why not sort of run it up to 36, 3700? They're not. And I think that's got to be taken note of. And look, I could be eating my words tomorrow and it could be up over here. Anything's possible, yes. But the point is that sort of, given sort of what is happening prior to it, given what's happening right now, given these sort of technical setups, I think there's a plausible argument to be made that we do see some downside here. What could potentially sort of lead to this is obviously, look, they're not buying it because of the war. So maybe if this comes off, they'll sell it down more anyway. If they're already selling it, maybe they're just selling into, it's only sort of holding here because, people are saying, oh, war, we should be buying gold. That's fine. They sell into it. If those people say, if they go, okay, oh, hold on, wait, they've reached, this is hypothetical, they've reached some sort of ceasefire or whatever. That sort of demand for Joe Blow to be buying gold. He's buying gold here. He's buying gold here. He's buying gold here because, war's happening and the textbook says I should be buying gold. These guys are selling into it. If they have a ceasefire and these guys go, well, hold on, wait, I was buying it because there was war. Now there isn't any war. So all these guys pull back a bit. What happens to the price then? Well, obviously there's nobody buying it for these guys to sell into. So in theory then, this selling won't just abate. They were already selling it here. They were selling it here. They're clearly selling it here. If there's no buyers to keep the price supported, that would open it up to a drop down. And look, I'm not sort of saying that it's coming all the way back down over here. Obviously, as I said, there's lots of levels of support through here. But that's a scenario, in my opinion, as to how we could potentially see and justify a move a little bit lower with gold. Now, in terms of sort of how far down, well, you could do a couple of little bits of not really sort of super trustworthy of these things, but if we have a look at a move off this 3 drive and we take the size of this last move from the support up to the body of the candle of the 3rd drive, that does come down pretty much into a level which we've seen buyers sit previously, meaning back down around this kind of area here. It's 3100. So it doesn't mean necessarily, okay, game's fully over, but I could see a scenario in which we do get back down to 3140 if these technicals and, of course, the fundamentals allow for that to sort of happen. And this is the point. You start with a small move, which would be breaking this wick, breaking this support. That's the first move, opens up to a reasonable test for, 3280s. You're probably going to see a reaction from 3280s. I mean, we've seen it. They love to hold this zone. But should it come up and then break that a second time, well, then what you're looking at here, because in this sort of scenario, because of course it depends on the speed it comes down, you then have this rising support that comes through here. You've got the horizontal, so there's a confluence. If you break that, well, you're breaking the horizontal, you're breaking the rising support, and then you can start to look for your move back down. But it all starts with these little moves back up here. So that's my outlook with gold moving forward. In the short term, still the same thing. Just take out that wick. It's just consolidating. I think at the moment, above sort of 34.10, maybe it pushes back up and retests the highs. Below 33.60, I think we sort of open the door for a more substantial drop down. Of course, again, look, there's going to be support levels through here, but that's kind of where I'll be targeting. Expect a bigger reaction from 3300, 3280, this kind of zone down here. Flip onto Aussie, because Aussie got slapped on the nose last night. Look, Aussie, there's so many charts here. Let's have a look at this one here. This is the bigger one that I've been sort of trading off. The whole idea of this rising wedge, which, I've sort of put a chart on as these things happen. The other night, I think we're up here at sort of 65.50. It had a little second effort yesterday, obviously came in for a lower high and then pushed back down. Now, it's a couple of things with Aussie here at the moment. It's coming into its 61. If we zoom back out a little bit here, we're coming into a big confluence here. And this is what I've been calling out. This is our drop down from October last year, sort of taken down to April lows. We're at the 61%, which we know is a strong sort of retracement level. We've got a horizontal through the middle here, so we could see way back. This is around just after the elections. So we had that sort of big retracement, that 127 retracement just the day after the election, and then bang, opened it up. But this is really, as you can see, dropped down, sold into it, and it hasn't returned back here. So it's moving up. Look, it's still, again, similar to sort of gold in respect that it's a breath away from its current high, but you've got this wedge setting up here. We're testing the supports at the moment. That's a bearish reversal. This is the measured move should that sort of play out down to sort of 63 or so. You've got the 61%. You've got the horizontal. That's 3 aspects to give you resistance at this level up over the top over here. Now, again, it's still within this setup here, this sort of wedge. So it could very much, as I've seen a number of times, test, bounce, test. There's still room to go in this wedge, should this be the one that sort of plays out. But the rejection from the top over here at 65.50, that's warranted, in my opinion. And if we look at this on the weekly basis, this is what, 1, 2, 3, 4, 5, 6, and it's going into its 7th week, unable to close above 6,500, which we can see is a big support level on a weekly basis, going way back. I mean, this is, obviously the little fake out area that we've had here, which we know Aussie loves its little fake outs through these weekly time frames. They could be big sort of things, but if you disregard this part, look, you could see how many times it failed to close underneath it, What happens eventually? when it fails so many times to close underneath it, you get a big reaction back the other way. So it stands to reason that being overbought on a weekly, 7 times failing to move through the top over here, we could see a substantial move back down to the bottom side here. And this goes in line with the idea that we could see US dollar catch a bid. And this is why they all sort of flow in together. If we see sort of gold coming off, if we see US dollar ripping, there's a good chance that we'll also see Aussie take a little bit of a sort of breather and a pullback. Of course, I mean, we can look at sort of levels that sort of line up as to where it may sort of come back to. Oh, that's gold. Where it may sort of come back to. And if we take this bounce move up over here, 61% lines up beautifully with this previous support level, 61.55. Now, look, I know it seems insane. It seems like, oh no, what are you talking about? We're a breath away from the highs. I mean, that was just a little calculation I was working on last night. We're a breath away from the highs, but 61% is a plausible move. And if you look at this, again, this is a weekly time frame, so it's not happening tomorrow. We were ripping. We put in multi-year highs. It was a very long time. That was Feb 23 to September 24. So, yeah, year and a half highs, bang, bang. We got absolutely slammed. It's now made its way back to 61% of that. So it is plausible that this could still make its way to 61% over here. And this is, again, predicated on the idea that we could potentially see a prolonged period of US dollar buying. And if we do see that, Aussie is very, very much going to be vulnerable, because if you look at the other sort of major currencies in comparison to what US dollar has done, US dollar is against the majors at like multi-year highs. Well, it's multi-year lows, sorry, but for them, you look at the euro, look at the pound, these kind of things, they're pushing those. Aussie at its best could only get back up to 61%. So they're still not buying it at the same rate that they're buying these other currencies against the US dollar. So if they start to sell the US dollar against them, why would Aussie automatically be immune to that movement, is my opinion. And this is obviously a bit more sort of larger time frame sort of thinking, but should the smaller moves play out, that could open up, of course, to bigger moves. And that's potentially where we could sort of see a move of Aussie going back. If we get into a sort of bit more of a usable sort of time frame, where's that chart that we were using? Usable time frame. We've got a little horizontal support here, as I've seen. This is the plan yesterday. Obviously, we got a little push up here first, but it's pushed up, came back down. We're getting the little bounce. Now, this support obviously is held a number of times. This is when the a war was announced. Oh, hold on, wait, maybe it's not. Back up over here. Hold on, wait, it's back on. Back down over here. So really, you got a bit of a range setting up through here. But should this play out, if we get onto a 1 hour time frame, this is the bounce that we were kind of expecting. It's pushed back down here. So it's actually held twice down here. I didn't actually see this on the lower time frame. But should this thing sort of come back down and break through this level, I think this is going to be an area where we're going to see a little bit more movement. Should we see that stuff happen? So we know sort of, DXY is at that falling resistance, Aussie's at its little support. I think both will go hand in hand. You break through that support, that resistance on DXY, I think you're going to see US dollar buying across the board, which is going to then push Aussie down. So I think underneath this, so let's take it properly just down underneath this wick. That was the call it war announcement wick lows. Down to 64.56. So it's down 64.50 underneath there. I think that'll open up for a little bit more downside. At the moment, it does look like it wants to push up here a little bit, but where are we at? 10:30. And we can see sort of what happens through, rest of the session. All right, and move along. We've got silver, which continues to sort of rip up-ish, okay, I guess, kind of maybe. Look, I haven't taken a part in this latest silver move, but one thing I pointed out, and I put a chart on X yesterday, is this big rising resistance here, which of course was the great one that we used, or I used for that wedge break back in April, where I caught this short side move down here, which is amazing. This has shown up again and yet again as a little short-term resistance up over here. So look, these things that don't always hold, of course, but little rising wedges, they are generally typically kind of reversal. So I thought this may have sort of had a bit more of a cool down, but obviously it's pushing up to the top over here again. Should this thing come back down here, this is the line, this rising support here is what I'm really interested in. Should it break this, this is the pattern that I'm looking for to come sort of back down. Should they hold it, well, this is the area that, they're going to kind of want to do it. Let's push this, update this a little bit up over here. Should they sort of break through this, yes, we could look for a bit of a deeper pullback. Should they sort of come back down here, reload, and then bounce back up, well, again, you still need to get above this horizontal, 3740s, and also this rising support, rising resistance through here. And that could really open you up for a little bit more top side. But for me, I still think we're probably going to see a little bit of a cooling off on this. And again, I think it all comes back to the US dollar. I think the US dollar, should it start to catch a bid, it's going to be really sort of catching a few people out because the market is so heavily bearish on it. People are going to be going, okay, well, do I either get onto this US dollar run, or do I sort of maybe clear up some positions to give myself a little bit more free, sort of free room? And if that's the case, they're going to have to take things that are basically in profit. If they want to sort of allow, and this is why the sort of the fanboy thing for the US dollar is always interesting, is because people will start to go, okay, well, look, I'm in profit here. US dollar is still going down, but they're just squeezing me. That's okay. I take a bit of profit from this here, give myself a little bit more leeway over here, and looks like it's coming down. I've done it right. Bang, fanboys kick it up another level. All of a sudden, all these profitable positions, they need to take a little bit more to accommodate for that move. And they need to take a little bit more and accommodate for that move. And the US dollar is really the mover driver of it all, in my opinion, because that's the kind of thing that is really going to squeeze people. When people are so heavily one-sided on these things, they're so heavily bearish, it takes them a little while to come around to the idea that this thing is not going to stop, and it keeps pumping through, pumping through, pumping through. We've seen it before a number of times with the US dollar, and they call it the US, like the wrecking ball, and it just keeps moving up. I call it the fanboys. It's the same thing. It just keeps on jamming up, and when it takes you a month or 2 months to turn something like DXY around, again, it's not going to peter out in 2 days. And this could be the trade of the summer, European summer, of course, not old Melbourne winters. But that's the thought looking forward in that. And these things that are at the highs, there's a lot of profit on the table. Well, you take your profitable things. They try to sort of manage these US dollar things to get them through those times. These things, that's what can lead to these things breaking down. You take your profit from your gold trades, you take your profit from your silver trades. Aussie, geez, who the hell's in profit on Aussie? It's just been going back and forth. But Aussie is just going to be a collateral damage because risk will be selling off. You got equity markets, they're at the highs. So all these things punching at their highs, equity markets, gold, silver, you know what I mean? If you've got to accommodate for this thing for the US dollar, should it start to run, these things are all going to suffer. And this is, in my opinion, how they're all linked together. Because the cash has to be somewhere, the money has to be somewhere, the capital, whatever you want to call it, has to be somewhere. And if you sort of have to sell out of here to put it into here, and then, based on the idea that that's going to sort of like this is then going to come down, but it doesn't, this moves up, well, you're going to have to take another lot of this and you're going to have to sell that a bit more to accommodate this move. And it's all just a balancing act of where the capital is. But you got to keep in mind the capital is somewhere. And should they start to sort of see value in US dollar, should they, if the narrative kind of supports it, then the people are going to start to take capital out of these other markets where they've got profit to try and either profit on that thing that is basically at multi-year lows and has some potential for some good upside. So that's what I'm looking for, sort of moving forward. Tick along, we got copper. Copper is, as I said, not really doing anything. On the lower time frame, we do have this sort of rising support, which it does look like it wants to come back and test here. This needs to get a boogie on. If this is going to move up, it needs to hold this line, in my opinion. You break through here, yeah, you got these horizontals. Break through here, first test is down at 470. 470 breaks, I think that opens up to a bigger thing. I think this is the nice ledge, which you could say, hey, is a little springboard to go boom, 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 and come back down here. But this rising support, I think, is what's going to sort of, let's put an alert on this, channel support. I think this is going to play its part. And I think it should have break down here and take out these, which effectively will be its swing lows down here. I think 470 or 468, this support here is really where you want to see what the market does. This is first indicator, last line of defense. You break here, I think this gets a lot bigger. Whoops. And I think that moves down a little bit deeper here for sure. Again, it all goes with this sort of stuff. If they're buying, and again, the reason it's not just the US dollars at multi-year lows and all this yada yada, but if they're buying that because of a fear factor, then that's going to be another sort of narrative catalyst for copper potentially coming back down there a little bit as well. I'm not really looking for much upside on copper at this point. I guess you got a little move through here, but yeah, no, I'm not really too interested. Whoops. Not really too interested on upside for copper at this point. And finally, USD China. So we are testing kind of this resistance in its range, but again, look, it's one of these things. When it grinds, it just grinds, and this is just sideways, sideways. Out of this range is what I said the other day, hence these two little arrows. I am sort of feeling more of the top side here, going along with the theme of what I'm sort of planning here, Aussie down, gold down, and US dollar buying across the board. So if we see these things break on the other side, it's most likely we're going to see this break as well. Same sort of deal that we had over here. We've got to break through this 722. 722 is the bottom side of a very long support range that we had going back. When's this going back to? November 24. It's only November 24, low time frame maybe. But it felt like we were in this for ages, which we were actually 6 months or so. Regardless, these are your targets still here. Like I had them marked over here, just apply them back over here. I think they're still the same levels that I'm looking at. This level here, this level here, here, and here. All this across here. But again, they work on the basis that, we break we break the lower levels first because you've got to break the bit lower levels to get to the bigger levels. But point is that you've got a little range down the bottom here. Should this thing break to the top side, you're still going to have to deal with the 722, which they've obviously knocked it back a couple of times. But should we see an absence of sort of or a reluctance for the sellers to hold it at this level, then it opens you up to your 725 and 728 effectively after that. So that's still the move that I'm kind of looking for here. All right, and that's pretty much it. Where we at? It's 43 minutes, a little bit longer today, but obviously sort of unpacked things a little bit further. Gold-silver ratio, very much sort of in line with what's happening at the moment. Big silver move. Gold took over for a week while we were doing, sort of thinking that, World War III was happening. And this is another thing that, this is the thing, sort of gold's pulling back, silver's pushing at its highs. Should this thing break down through here, it probably bodes well for silver, but certainly it won't bode well for gold. And this could kind of be a bit of your channel sort of through here. If it does come down here, this is going to be an interesting area, just quickly, because this zone down through here, not only is it this kind of bottom side of this little channel that we've got going on here, this is actually like a major kind of support area. Going back to May 24. So I think that that will definitely sort of give us something here. And again, look, gold's not going to go down in a straight line, but should we break through here, this is kind of what I'm looking for, a reaction down here and then a move up there. Make this one a bit smaller. Look at that. So I would say definitely say we probably got a little bit more downside with that to come as well. This obviously was the top end of this range that we were in for 3 months. But should we break down under this, I think the downside here is a little bit limited. So this could maybe see a little pop on silver down here, and then maybe a little bit of a break of supports with gold, and then maybe a correction should we get back down into this area. So I'll put a little alert down here as well. Confluence, supports, flip from silver, strength to gold, strength. That's where I thought I'd be looking for. All right, that's it from me.